What's up, YouTube fam? Welcome to the $20,000 Make Passive Income with Option Selling Challenge. So obviously you see the account's at $20,587. It's because we already took a trade, so I'm going to go over it. I'm going to go over the strategy in this video and possibly either take the next trade or at least explain what I'm thinking for the next trade. The point of this challenge is to just track the journey, right? Ultimately make passive income. So, if I could use option selling as a way to pay some bills, that would be great. Obviously, I'm only starting with 20,000, which is a very reasonable amount. I think a lot of people have 20,000 saved. I know the average person probably doesn't, but I want to prove that even with an amount like 20,000, you can generate relatively good passive income with option selling. And of course, the account is going to compound, which is going to allow us to just make more as time progresses. So this is going to be video one of this series. Like I said, we started with 20,000 last week. We took one play, and let's go over the play now. So we're going to go to history. Don't mind this. This is just like a test trade. Obviously here you can see the $20,000 deposit. And this trade was when I had, when you do the $20,000 deposit, Robinhood gives you the 1,000 instant deposit. So I did the 20,000. It didn't hit until November 6th. But while I was waiting, I had 1,000. So I was just messing around. Didn't even make or lose anything. It was a break even. But here's the play, right? So we took an option sell on a firm, right? So let's pull up the chart and we're going to look at Wednesday. And we took the trade at 9:41 a.m. So we entered it around here, right? Now, all of this is really just noise, right? We're not buying options, so we don't need to be trying to scalp plays, right? We don't need to be looking at the smaller time frames. So how I do it, right, is I really go to the weekly, right? And this is how I keep it simple. So let's just scroll over. So I honestly never use the ATR. I'm sure any beginner trader or novice trader or advanced trader knows what the ATR is, right? And let's be real, most of us aren't using it. But when it comes to option selling, I do find it to be a good tool, right? Why do I like the ATR? It's because it tells you the average true range of what the stock should move for that specific time frame. So in this case, we're looking at the weekly. So what do we see? We see that it moves on average 6 points per week, right? So when I took this trade, the firm was at, does it say it here? No. All right, we'll go back to the smaller time frame so we can look at it. I believe the firm was at like 47.50, right? Something like that, right? So here we are, Wednesday, 9:41 a.m. So yeah, it was at 48, right? So I took a strike of 44.50, which was down here. Now, how did I come up with that strike? Well, you know what it is. So there's multiple things to look at. We're looking at delta, we're looking at premium prices, and then of course we're looking at the ATR. The reason why we're using the ATR is because the only way you could really lose in option selling is if the stock really moves against you. So in puts, you want it to either move up or stay, afloat, or at least just stay above the strike price, right? So in this case, my strike was 44.50. So let's just put a line there just so it's easier to see it, right? Well, I clicked the wrong one. So right here, 44.50, right? So in this case, all we needed was it to expire above 44.50. So it's funny because obviously Friday it had earnings, which is part of the strategy. Now I'm sure some of you are going to watch this and be like, oh, you're selling options when they have earnings. That's gambling. Well, we're selling options on stocks we want to be owning anyway, right? Like if we look at the earnings reports on a firm, right? Look at it. It's beaten earnings every quarter for the last X amount of years. So I don't care if I'm stuck holding it because it's a good stock, right? So ultimately what happened on Friday, it came well below our strike, but it eventually expired above it. So we didn't have to buy the shares. We were able to just take our passive premium and call it a day. So that's kind of how we're doing it, right? We're using the ATR, we're going to the weekly, and then we're picking premiums that are actually juicy so we can actually make good passive income. So in this case, right, obviously the week is over. The stock expired above our strike, and that's that. We collected our premium, and now we move on to the next place. So this week, and this is one of my favorite stocks, Shopify, has earnings. Now again, what happens when there's earnings is the stock moves a lot. So it could be scary, but at the same time, there's something called an IV spike. What is an IV spike? An IV spike is like for lack of better terms, it's almost like that pre-ejaculation feeling where, it's like there's all this built-up tension, so the option prices are skyrocketing, right? So let's compare. So Shopify's at $90 a share. Let's look at Starbucks, which is also at $99 a share, right? So relatively similar share prices. So if we go to sell puts on Starbucks, look at these prices, 37 cents, right? Now if we go to Shopify, look at this. Oh my God, it's 10 times the price. So, the reason why it's so much more expensive is because obviously Shopify is a more volatile stock. And when you combine that with the fact that Shopify has earnings tomorrow, it's called what's, again, I just mentioned, an IV spike. So, we're not afraid to take that risk because the worst possible case is we take the Shopify play, right? And I'm sorry, I'm going on the lower time frame just so I can get a better look at what's happening right now. We take the Shopify play and we end up having to buy it. So let's go to the weekly, right? And we'll look at the ATR. The ATR on Shopify for a week is roughly $6. Right now, Shopify's at 90. So, if we look at this delta, the delta is 30%, which basically what that means is there's a 30% chance it expires in the money, which is why it says 72% chance of profit, because it means there's a 72% chance that we collect our premium and, that's it, right? Because in the end of the day, the only way we could lose on this play is if Shopify dumps way below. Because what happens when you sell a put? So if you're an advanced trader, you know what a buy limit order is, right? A buy limit order is essentially where you let's just say you wanted to sell the 87 put, right? So a buy limit order is essentially you telling the market, if the stock reaches $87, I'm going to buy that share. So in the case of selling puts, right, what we're basically doing is, let's just say we were to sell 87. What we're saying is if the stock expires below 87, we're buying at 87. So 87 is a buy limit order. And the beautiful part is so I have 20,000 in the account, right? So it would be 16,000. So the beautiful part is we're collecting $850 while waiting for the buy limit order to potentially hit. That's really all selling options is, specifically puts. Now, if it does hit, right, then we're stuck holding the shares. And that's why if you're going to do this, you have to do it on stocks that you genuinely trust. If you're doing it on on penny stocks, on, shit stocks, whatever, you're putting yourself at massive risk. Something like Shopify, if I had to buy it at 87 and it went all the way down to 77, all right, 200 shares, I'd be down $2,000, but I would have collected 900 on top of the fact that, it's going to probably go back up. So what I would do, or what I will do, and we'll see as this video progresses, or not video, sorry, series, is I will do the wheel strategy, right? So I will then sell the shares all the way back up. Now, I know what you're probably thinking. Well, what if I buy at 77, or sorry, buy at 87, it goes to 77, and then when I try to sell, I sell the 81, and, I get stuck at a loss. Well, then that's what's called rolling. So we'll cover all that as this series progresses. I don't want to get too ahead of myself, but ultimately, I just wanted to explain the strategy, use this video to do it in the quickest way possible to show you guys how to get the biggest bang of your buck, right? Because not all options are created equal, right? Two people can have $20,000 in an account, and you can sell options on a stock like Starbucks where you're going to get paid pennies, or you can do it on a stock like Shopify where you're going to get paid hundreds and hundreds of dollars. Now, of course, it does take a little bit of balls, right? Because we're doing stocks that are more volatile, stocks that have news, but they're stocks that we trust in the long run, and we're not, listen, obviously we're in this to make passive income. That's the point of this challenge, but at the same time, we're in it for the long haul. So I don't care. I'm happy to collect $800 on Shopify. Worst possible case, hold the stock for months, continue to sell calls while I hold the stock until I exit it for a gain, and pretty much put myself in a position where I can't lose. And someone who's watching this that's probably never sold options before might think, oh, this sounds risky, this sounds crazy. Someone like myself, I've been trading for years, so to me, selling options is a lot less risky than trading Forex, crypto leverage trading, buying options, shitcoin. I've done so many things in the markets where to me, this play is so much safer. So I'm going to be selling options on Shopify this week. Today specifically, I don't think I'm going to get it in this video because I don't want to keep you guys around for hours. But by next week, when you guys see the next video and you see how the play goes, we'll see. So That's all for this video. I hope you guys learned how I made $600 last week, pretty much passively. Make sure to tune in next week to see how the Shopify play goes, where I get this entry, the puts I sell, and what ends up happening. I hope you guys enjoyed this video. I hope you learned. Make sure to like, comment, share. Let me know what you think, and I look forward to seeing you guys next week.